Concrete. E-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down Friday, a Jobs Friday, and red on the screen with the Dow, the S&P, and NASDAQ all in decline. S&P dropping 5 points now, down 0.1%. We've got the Dow lower by 6, little change, down less than 0.1%. NASDAQ down 54 for the NASDAQ Composite Index, down 0.4%. 10-year yield 1.59%. 10-year down 6/32. Gold up 0.2%. Spot gold 17.59 the ounce. Bitcoin up 0.2%. 54,272. And West Texas Intermediate crude oil right now, it is up 1.2%. 79.24 a barrel. S&P 500 and NASDAQ declined in turbulent trading after data showed employers added fewer jobs than anticipated last month. Anastasia Amoroso is Chief Investment Strategist at iCapital Network.
Look at the 4.6% wage growth number. The Fed is going to be encouraged by that, especially against the backdrop of higher inflation. So I don't think it changes much. I think it keeps the Fed taper very much on the table for us.
Crude oil topped $80 a barrel here in New York for the first time since November 2014, before pulling back as a global energy crisis boosts demand at a time when OPEC Plus producers are keeping supplies tight. ExxonMobil shares, they're up along with the rest of the group today. Exxon up by 2.4%. BP up now by 1.8%. Chevron up 2.2%. EOG Resources up 4.4%. And Pioneer Natural up now by 3.5% as we cover a broad swath of energy stocks. So again, recapping here, we've got stocks trading mixed right now. The Dow just turning higher, up by 1 point. Little change, that's the key takeaway. Volatile day with the S&P down 4, NASDAQ lower now by 49 points. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Friday, October 8th, 2021. Yep, it is all about jobs today. A disappointment and a bit perplexing. So what's the Fed to do? What's an investor to do? Not so sure based on the stock trade today.
Yeah, that's exactly what's looking like in markets. I mean, markets not really knowing, or investors not really knowing what to do. It's a theme that we're going to explore throughout the show today. We're also going to get an update on COVID. Merck's pill, well, we've been talking a lot about that for the last week, but is there a chance that it could get outsmarted by COVID?
Yeah, it's a great question. We're also going to talk about the New York City tax break. That's not really meant for you and rich kids. We're talking to you. It is among the most read stories on the Bloomberg.
And Tesla, adios California, hola Austin. 5 takeaways from the company's annual shareholder meeting.
Yeah. A lot of news. And just a lot of fun talking points out of that Tesla meeting. Also, a former 4-star general. We're talking about Stanley McChrystal. He's got a new book out. It's all about risk. He knows about that. And we'll talk to him about so much that is risky in our world. First up, though, let's get to the market drivers report. And let's set the Business Week agenda, because with us is our own Dave Wilson, stocks editor. He's in our Interactive Brokers studio, along with Reed Pickert. She's U.S. economy reporter at Bloomberg News, on the phone from Washington, D.C. Dave Wilson, it really does feel like investors aren't quite sure how to read the jobs report and kind of what comes next. We know what comes next is earnings next week, but for today, it's a little unsure.
That's right. I mean, with earnings on the horizon, you can understand why people would want to push share prices around. And let's not forget, the past couple of weeks, we had that sort of up one day, down the next move in the S&P 500, and then sort of the strength in the last couple of days. So, a bit of settling out as people look forward to earnings. Maybe not a surprise. I mean, after all, analysts, if you put together all the numbers on the S&P 500 as we do here, you're talking 28% plus earnings growth for the third quarter, and about half of that in terms of revenue increases. I mean, that's a lot to live up to still. I mean, it's not anything like the second quarter when the numbers are really distorted in a sense, because last year, was really the height of the pandemic for a lot of companies in terms of the effect on their business. But, still, I mean, you're talking about some relatively substantial increases that companies are going to have to justify here. And it's a lot to live up to.
Hey, Reed Pickert, come on in here and help us make sense of the numbers that we got this morning. 194,000 versus a survey of economists by Bloomberg expecting 500,000. Investors not quite knowing what to do. Does it change the timeline for the Fed when it comes to tapering?
Well, this report was certainly unexpected, to say the least. On one hand, you had payrolls come in well below expectations. But on the other hand, you had the unemployment rate fall to 4.8, which on the surface is good news and can kind of talk a little bit about why there was a confusion in trading right at the beginning. But in reality, it actually reflected a decline in workforce participation, which is not so good news. But in terms of what it means for the Fed, it depends on who you ask. Heading into the report, several economists I chat with and follow had said a November tapering announcement was pretty much baked in. And then, others had the figure of concern pinned around 200,000, which of course makes 194,000 quite a pickle. But in the end, this is a backward-looking report, and the Fed knows that. In early, mid-September, when this report is reflecting, COVID-19 cases were still quite high. And, where we stand now, cases are falling in most states, and high-frequency data has shown some improvement. And then, of course, you had wages up 0.6% month over month in this report, which suggests that the labor market is quite tight as employers are really trying to attract workers to fill these open positions.
Reed, one of the things that I heard earlier on Bloomberg Television, I think it was on David Weston's show, was one guest who talked specifically about that there's been a pickup when it comes to jobs later in September, which is not reflected in this report. And we have to remember that this report can be noisy. Is that the case?
Exactly. So it's important to think about, when we think about the payrolls numbers, always, it's a snapshot of 1 week in the middle of the month. So in this case, any kind of pickup in hiring that we saw later on in the month would actually show up in the October report. Right. And, sadly, from the Fed perspective, we won't get that report until a couple days after they already, have their meeting.
Right, so that's why, hence the pickle, which I really think is really smart. So, Dave, at this point, maybe it's not a surprise to see investors do what they do because they need information to trade on, right? And until you maybe hear from CEOs about what's happening with margins, what's happening with costs, what's happening with their ability to hire workers to meet demand, maybe we're going to hold off investors.
Yeah, that may well be the case. I mean, I can't help but, focus in on, Fastenal. I mean, they're actually going to be the first company out of the gate in the S&P 500 with results. They're due Tuesday.
Yeah.
You had a bit of pessimism coming out of Wells Fargo. They brought down their rating. They're concerned about a number of risks with this company, and that ties into supplies from China. It ties into wages. All the sorts of issues that are really front and center. And what you get out of that is a stock that's up 0.4%. So it's clear in that case, at least, people are waiting for the numbers, and they won't have that long to wait relative to every other company in the S&P 500 to find out what's really going on here.
All right, we're going to run. Guys, thank you so much. Dave Wilson will be back a little bit later on with his chart of the day. And Reed Pickard, thank you. Have a good weekend. U.S. economy reporter at Bloomberg News.
Let's do the Bloomberg Business Week bite of the day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. You can learn more at GEP.com.
Today's number, 1.47 million. A shoeless Joe Jackson autographed photo from 1911 selling for $1.47 million. The price for the image offered by Christie's and Hunt Auctions in New York. It was the most ever paid for a signed sports photo. Jackson, of course you might remember, was part of the Chicago Black Sox scandal back in 1919, was banned from baseball the following year, and of course, in a field of dreams.
This is not an NFT, Carol.
This is not an NFT.
This is a real.
This is an actual
real
thing.
Yeah.
I kind of get that.
Yeah, so do I. NFT, not so much. Let's get down to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. U.S. job growth in September was the slowest this year. The Labor Department says non-farm payrolls increased 194,000 last month. That's way off projections. The unemployment rate did fall, though, to 4.8%. Bloomberg's Irv Chapman has more on the Biden administration's take on the numbers.
The persistent Delta variant continued to have an impact, Labor Secretary Marty Walsh said in a Bloomberg interview.
It's about the pandemic. People are concerned about the Delta variant. People are concerned about their health. People are reevaluating work-life balance and changing careers, and I would love to see higher numbers. We're seeing lots more women come back into the workforce. That's a good sign for our economy.
Walsh said the forthcoming mandate for large employers to require vaccination should increase the confidence of workers to get back to jobs and customers to shop and dine out. In Washington, Irv Chapman, Bloomberg Radio.
President Joe Biden is speaking right now about restoring two sprawling national monuments in Utah, reversing a decision by President Trump that opened the area for mining and development. The Beers Ears and Grand Staircase Escalante monuments encompass more than 3.2 million acres, an area nearly the size of Connecticut. They're considered sacred to Native Americans. The Nobel Peace Prize is going to two journalists.
Maria Ressa and Dmitry Muratov for their efforts to safeguard freedom of expression, which is a precondition for democracy and lasting peace.
That's Nobel Committee Chairwoman Barry Rice Anderson. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Carol Massar along with Tim Stenovic in our Interactive Brokers studio. So we're all about jobs today, and we're going to talk a little bit more about what's going on in the labor force. We're going to do that with the president and CEO of Kelly, which provides employees for employers. In the meantime, one of the more troubling aspects of the jobs report, but maybe also explainable, is that we're seeing women leaving the U.S. workforce. And we're talking about specifically the decline of the U.S. labor force participation rate last month, driven by women who are leaving the job market.
Yeah, let's talk numbers here. The percentage of female workers over 20 who were employed or looking for work dropped to the lowest since February. That's according to data from the Labor Department. The reopening of schools, it was expected to help alleviate the child care burden that we've talked about so much. It mostly does fall on women here in the U.S. The idea was that schools would open and bring female workers back. but the data suggests at least now that wasn't the case, at least for the month of September.
Right, and remember what Reed said, I think is so important, that it's 1 week of data, and so what might have been happening later in the month, and if we look at schools, it was not just, oh, everything's open, everybody's back. Cases rose, schools were shut down again, parents probably, and women in particular, who often really shoulder the burden of taking care of kids, to be quite honest, maybe had to stay home.
Yeah, I mean, our school closed the first week.
Right? Like, I mean,
days.
you got, right, you were dealing with this, you know, firsthand.
And I wonder, too, if parents who've been taking care of their kids nonstop for the last 18 months through virtual classes, through hybrid, through an unclear situation, if they say to themselves, wait a second, okay, as soon as the student's back and my kid's back in school, I'm going to go and get a job right away. No, they might have to look for a job for a little while. They might have to apply to jobs. They might have to now have the time to apply to jobs. It's not an overnight process.
And this is why, even with those, you know, federal benefits gone, it is a process. And about women too, like I think this month that we're in and the data points that we might see, which won't be reported till after that Fed meeting and until, of course, that first Friday in November, will be really important to see whether or not this trend continues from the September data points or whether we get something different and we do see more people in total, including women and minorities, back in the workforce.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are fluctuating, Treasury yields gaining as weak jobs data upends bets on the Fed's policy plans. 10-year yield right now 1.59%. S&P lower, little change, down 1 point. The Dow back in the green, up 33 now, up 0.1%, while NASDAQ does remain lower by 44 points, down 0.3%. Spot gold up 0.2%, up $4 the ounce at $17.59. West Texas Intermediate crude up 1.5%, $79.48 a barrel. Alphabet's Google says it will ban digital ads promoting false climate change claims from appearing next to the content of other publishers, hoping to limit revenue for climate change deniers and stop the spread of misinformation on its platform. Alphabet shares up now by 0.5%. Recapping, S&P just turning higher, up now by 1 point. Bottom line, little change. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that update. You're listening to Bloomberg Business Week. You know you've been listening to us. U.S. job growth in September, slowest this year, signaling a tempering of the labor market recovery, really complicating that Fed decision, that next Fed decision when it comes to scaling back monetary support before the year end, although many still think the Fed will kind of continue ahead. Here at the front row seat on the U.S. labor market and hiring trends and metrics, we have the perfect guest.
We do. Peter Quigley is president and CEO at Kelly, joins us on the phone from Michigan. Peter, it's great to talk to you again. You have a really interesting role because your firm has really its finger on the pulse of what's happening when it comes to labor, because you provide staffing solutions in many parts of the country. So I'm wondering if this report was a surprise to you, or if you were expecting something that was really going to miss at this magnitude.
Well, I think the jobs report was disappointing to those that expected a bounce due to the expiration of the enhanced unemployment benefits and schools reopening, but that didn't materialize. But I tend to think of this as these 3 months, July, August, and September, as the Delta variant bookend. So in July, we had an outstanding jobs report, but the survey was taken before the spike. And in September, the converse, where we had a really disappointing report, but it was also at the beginning of September when we were in the midst of the spike. So I was encouraged by the private sector, 317,000, not overwhelming, but decent, because the big drag was in government payrolls. Local education was a big drag, and this wasn't surprising to us because we've seen major talent challenges in the we support 15,000 schools across 45 states, and not only are there shortages of teachers, but the entire education ecosystem. So food service workers, custodians, bus drivers, paraeducators. So all of that led us to believe that there was going to be some depression.
Okay, so one of the things that we discussed, Peter, is that the second half of September, at least anecdotally, people have talked about that, which is not reflected in the jobs report this morning, that you are seeing signs of more people going into jobs. What are you seeing in the later, or what did you see in the later half of September?
Well, the first thing I would say is there is no change in the demand. So that's the good news from the economy standpoint. Demand is strong across all of the industries we serve. We didn't see I would say, a significant uptick in the availability of talent in the back half of September. It's anecdotal, but we probably saw greater inflows of talent in areas where schools were fully reopened and not under some kind of temporary lockdown. And that, I think, just speaks to the importance of allowing parents to get back to work. If anything was concerning about the jobs report, it was the labor force participation rate dropping because so many women, and it was all women, that are leaving the workforce in droves.
Yeah, that among the parts that certainly got our attention. Peter, I'm wondering what you think this means for the remainder of the year and what you can tell us right now, because you do have this unique insight into what's happening real time when it comes to your clients all over the United States. What can you tell us about what you're seeing in October as we do get past the Delta variant?
Well, I think the expected bounce due to the reopening of schools and the expiration of employment benefits, we'll likely see that materialize later in the year. Whether it's October or November, I think remains to be seen. But as well, the supply chain issues that we're having, especially around microchips, as those begin to be sorted out, I expect that there will be an improving jobs picture.
So you're saying, Peter, that people shouldn't hold their breath too much for even next month's jobs report because we still could see the effect of the expanded unemployment insurance as well as people's kids going back to school?
Yeah, my sense is it's going to be choppy for probably the remainder of the year. I think until we get past the Delta variant and other issues surrounding COVID, I think it's going to be a little bit uncertain in the labor markets because we don't really understand why so many people are staying on the sidelines as opposed to coming back to the plethora of jobs, as record number of jobs across industries. So I think it's going to be a period of time, probably into 2022, before we see some stabilization.
Peter, just got about 50 seconds left here. You talked about women, and we too noticed labor participation, women really leaving. And we really thought at the beginning of the pandemic, flexibility in working was going to be helpful for women. We've learned that's not the case. What are you hearing on the front that women are leaving the workforce and they are not coming back?
Yeah, we're hearing that, and largely it's due to child care or elder care responsibilities. If kids don't go to school or if they're at home schooling, parents don't go to work if they can't work remotely, and even then, it adds to a level of stress that makes work intolerable at some point. So I think this is a really serious issue that we need to focus on to ensure that we get more women back into the labor force.
Right, really speaks to the heart of your organization, really the creation of it way back when. Peter, thank you so much. Peter Quigley, he's president and CEO of Kelly. I have to say my sister got a college degree years and years ago. To get a job, had to get some secretarial skills, went to Kelly, got a job in the city, and ended up getting her master's and doing really, really well. So I can understand that path, how it helped.
Look, it was called the Kelly Girl Company in the 1940s and 1950s.
Yep, exactly. All right, folks, we are going to talk more about the job report, more about the economy. You are listening to Bloomberg Business Week on this Friday, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So one of the big COVID stories, right, over the last week or so has been about Merck's experimental pill for COVID.
Yeah, many called it a game changer, even though it hasn't been fully approved at this point. And you saw the stock shoot up starting last Friday.
But it may not be the Holy Grail, panacea, I don't know, what's the right word?
At least so writes O'Reilly Griffin. We're going to talk all about that in just a few minutes.
All right, first up, let's get back to Charlie Pellet with a check on the trading day. Charlie, we're moving off our lows.
We certainly are, but it's been a day in which stocks have been moving between gains and losses. Right now, though, we have got the S&P positive, up 5, up by about 0.1%. Key takeaway, though, a lot of fluctuation on this Jobs Friday. The U.S. employment report did show weaker than expected gains. Treasury yields are moving higher. Weak jobs data upended bets on the Fed's policy plans. 10-year yield right now, 1.60%. We've got the 10-year down 8/30 seconds. S&P higher by 5, up 0.1. The Dow rallying now by 77, up 0.2%. Nasdaq, though, does remain lower, drop there of 0.2%, down by about 0.1%. Fluctuation, the word here. Might as well keep it locked into Bloomberg Radio for the very latest and see how things shake out at the closing bell. Gold up 0.2%. Spot gold $17.58 the ounce. West Texas Intermediate crude did climb above 80, up by 1.3%, 79.32, and Bitcoin up 0.6%, 54,527 on Bitcoin. Kids between the ages of 5 and 11 could be getting a COVID-19 vaccine as soon as the first week in November. Pfizer and BioNTech have finished submitting data to the FDA ahead of an advisory panel meeting set for October 26. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he says the next step has to be talking to parents.
The data that's going to come out with the FDA is going to show a good safety signature and a good efficacy signature in that population as well. But as always, it starts with communication. In the case of kids, we have to talk to the parents and make sure the parents understand the safety and the efficacy of these vaccines and then the potential benefit.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among the vaccine names that we follow, Pfizer shares, they're down now by 0.3%. ADRs of its German partner BioNTech, they're up 0.1%. AstraZeneca's ADR is up 0.5. Moderna lower now by 1.1%, and Johnson & Johnson up by 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We've been talking about Merck and their experimental pill for COVID-19. Should be accompanied by other treatments as soon as they're available to cut the risk of drug resistance that would limit its effectiveness. Wellcome Foundation Director Jeremy Farr saying that.
Yeah, this is a story that caught our attention because of all the attention that Merck's experimental pill for COVID-19 got over the last week. We saw Merck's stock rise starting Friday as a result of it. Riley Griffin is U.S. healthcare reporter for Bloomberg News, and she joins us now on the phone from New York City. So let's start with where things stand with regulators and Merck's pill. What is it, and what is the, well, I don't want to say promise because it hasn't been fully approved by regulators, Riley, but what's it supposed to do?
Yeah, Merck's pill is really important because what we don't have today, Tim, is a cheap and effective pill that can be prescribed to people who've contracted COVID. Right now, the treatment landscape is rather barren. You can get the monoclonal antibodies, which are in an infusion, or if you proceed to the hospitalized setting, you might get dexamethasone, a steroid, or remdesivir. But what we really want is something like Tamiflu, something that you can take from home. You don't have to venture too far, and it will stop COVID in its tracks, stop that replication process. We've been following Merck's pill for months now. Actually had a feature in Business Week back in spring about this very concept. And now we've got the data, and it looks fairly promising. But the question at hand that the director of the Wellcome Foundation is posing is it going to face drug resistance like we've seen with some of those monoclonal antibodies? And to backtrack for a second, what is drug resistance? That occurs when the virus and bacteria evolve to blunt or defeat a drug's mechanism of attack.
which is what we don't want to have happen, right? And this is what's fearful right now. I feel like we're in that Netherlands right now of, right, just people who've had vaccines. We're waiting. Not all of us can get boosters, and you're just wondering, am I still safe? Is there going to be we are dealing with the Delta variant, but is there going to be a variant that all of a sudden is going to be like, Pfizer, Moderna vaccine, J&J vaccine, not a problem?
Yeah, and people are following that with vaccines, but viruses are really wily things. They mutate to survive, and we've always seen this with antivirals in particular. And so that's a question here. But Merck, I spoke with them just yesterday, one of the leaders of developing this pill, and he says the bar for resistance with molnupiravir, the COVID pill, is rather high. He sees it as different from other antivirals in the past.
Can it be changed in real time, the way that other treatments or vaccines have been, at least the hope has been that they can be changed and tweaked with to help attack some of these variants or potentially resistance?
So typically how companies do this is they actually combine one antiviral with another. You might have heard the term cocktail to describe drugs. It's a silly term, right? But it really means you're combining more than one thing, and together you're combating resistance. And you might also be encouraging greater levels of efficacy. But that's not what Merck is claiming here. To get a little wonky with you guys,
we like wonky.
I like wonky too. He had said to me, Nick Kartsanis, the Senior Vice President of Clinical Research for Infectious Diseases and Vaccines at Merck, that earlier experiments with other viruses showed that the evolution of resistant mutations was really rare with molnupiravir. And another thing, the course of treatment is short, meaning that viruses get very few chances to evolve into resistant forms during that course. And then the last reason he shared with us was the drug's mechanism of action. To put it in as simple terms as I can, the way molnupiravir works is by inducing errors into the coronavirus's genetic material. Those errors are then replicated until the virus is practically defunct. And what Merck has found is that by inducing those errors, they're actually spread more or less randomly throughout the viral genome, which again means that the virus has fewer opportunities to develop those mutant forms that will overcome those errors. And that in and of itself, he said, makes resistance to molnupiravir a tough thing. Only time will tell. That's Merck's perspective right now. And they're not actively pursuing combinations, but should we see, say, Pfizer's oral antiviral prove successful as well, right, I'd be asking, could they combine the two together?
Right. Are two better than one, maybe?
Cocktail.
Yeah.
Cocktail. We've certainly seen that in medical history and treatment history before. Riley, thank you so much. Really clarified a lot on that. Riley Griffin, she's U.S. healthcare reporter at Bloomberg News, joining us on the phone in New York City.
Well, let's head down to Washington, D.C. for another check on world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. President Biden is restoring protections for two national monuments in Utah, Bears Ears and the Grand Staircase Escalante, as well as protections for a marine monument off the coast of Massachusetts. Former President Trump reduced the size of the monuments when he was in office, and he allowed commercial fishing in the northeast canyons and seamounts. Today, President Biden said protecting them is important.
There are more than natural wonders. They're the birthright we pass from generation to generation, a birthright of every American.
Biden says protection of public lands is not a pendulum that should swing back and forth depending on who's in office. U.S. employers added just 194,000 jobs in September. That's the second straight month of an extremely small gain, and evidence that the pandemic still has a grip on the economy, with many companies struggling to fill millions of open jobs. The drop in the labor workforce last month is being driven largely by women. Bloomberg's Amy Morris has more from Washington.
Data from the Labor Department show women over 20 years old who were employed or looking for work dropped to its lowest number since February. While experts believed that reopening schools would alleviate the child care burden and bring women back to the workplace, the numbers show that didn't happen. contributing to September's slowest job growth of the year. Numbers show that adult black men also left the job market with their participation rate at its lowest in 7 months. In Washington, I'm Amy Morris, Bloomberg Radio.
A majority of Americans now support requiring public school students ages 12 or older to be vaccinated before attending classes. That's according to a Politico Harvard survey. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. And just want to mention a headline, just crossing the Bloomberg terminal. The college scandal parents both found guilty in that Boston trial. The parents were accused of bribing their kids' way into college. I believe this is the parents, I think it's Gamal Abdelaziz and John Wilson. They were the two parents. I'm just looking at it right now. The headlines are just crossing at this point, but this goes back to the Varsity Blues scandal.
Yeah, we'll continue to bring you updates on it when we get it. In the meantime, want to talk a little bit about what's happening at Barclays right now. The company rethinking its macro trading desks for less volatile times. The company
didn't have a segue between those two?
I know. What am I supposed to say?
I don't know.
Like I was trying to rack my brain
and
to
for something different.
I was trying to rack my brain to think if there was any sort of connection between the two. But
I wasn't ready to leave.
You want to keep talking Varsity Blues.
Well, we're talking about, Rick Singer at the center of the scheme. I'm just looking at some notes about ahead of the trial here. It looks like the father was a former casino executive from Vegas, charged with paying $300,000 to get his daughter into the University of Southern California as a basketball recruit. Wilson, the wife, I think, was a former Staples executive who now heads a Massachusetts private equity firm, accused of paying. I'm sorry, they're two men. Excuse me. Accused of paying $220,000 to have his son designated as a USC water polo recruit, and an additional $1 million to buy his twin daughter's ways into Harvard and Stanford. So I believe those are the parents that were involved in that Boston trial. Sorry. Okay, go ahead.
Are you sure?
Yeah, I'm ready.
Are you sure?
I think I'm done.
We'll talk a little bit about what's going on with Barclays and with the macro trading desk.
Yeah, so Barclays is considering shaking up parts of its global markets unit that are underperforming as the lender prepares for volatility drying up after the pandemic, according to those in the know. We're seeing more volatility in the market, so they're getting ready for maybe what they believe will be the next phase.
Which will be less volatility?
It's very possible if we get some clarity.
When?
It could happen.
Okay.
Markets get complacent.
I'm ready.
They happen.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P higher, little change, turbulent trading. S&P up now by 1 point. Stocks have been fluctuating. Treasury yields gaining as weak jobs data upends bets on the Fed's policy plans. The Dow higher by 38, up 0.1%. Nasdaq down 34, drop there of 0.2%. Again, the S&P virtually flat, up now by 1 point. 10-year yield climbing to 1.60% on this Jobs Friday. Spot gold up 0.1%, $17.58 the ounce, and West Texas Intermediate crude up 1.5%, $79.44 for a barrel of WTI. Walmart says, quote, the overwhelming majority of employees required to get COVID-19 vaccines have received those shots, but the retail giant says employees who aren't fully vaccinated can complete the process this month, quote, while on a leave of absence. Walmart shares, they're up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And we do want to just rehash a former Wynn Resorts executive and a private equity investor found guilty in the first trial of parents accused of cheating to get their children into elite U.S. universities. We're talking about Varsity Blues, and it looks like the two of them are potentially facing some jail time.
Yeah, and you know what? It actually is a perfect segue into our next story that talks a lot about wealthy parents and what wealthy parents are doing to help their kids afford homes, specifically in New York City, that weren't necessarily meant for them.
Exactly. It's in the new issue of Bloomberg Business Week magazine. It's among the most read. We're not saying anything illegal is being done.
That there's no parallel. I don't want to imply a parallel that there was anything illegal, but
just giving you a hard time.
I'm just working on my segues, Carol.
It's among our most read on the Bloomberg today. Story about New York City's real estate tax breaks that, as Tim mentioned, have turned out to be a loophole for rich kids. That tale and reality. Let's get to it with Bloomberg News financial investigations reporter Caleb Melby. He is on the phone. He's hardworking. He's in St. Louis. Caleb, interesting story. First of all, tell us about this tax break and how that's become a loophole for some.
Yeah, absolutely. This is a program called the HDFC Cooperative Program here in New York. That stands for Housing Development Fund Corporation, a whole alphabet soup of a name. And what happened in the 1970s was, of course, you had white flight out of New York. You had the financial crisis in New York City, and you had these slumlords who both stopped making repairs to their buildings and stopped paying taxes. The government eventually seized those buildings for unpaid taxes, but didn't want them to go back to the same landlords for fear that the same thing would happen all over again. So they looked to this state law that allowed them to create cooperatives designed to be for low-income people, to provide income for low-income people. They turned these buildings over to the former renters for $250 a unit. And it was this kind of historic transfer of wealth and property in New York City. But a lot of those people didn't have money to repair their buildings either. So the government created this tax break to try to help them out in 1989. But throughout time, nobody's really created any stringent rules about what these units can go for or how much you can have in way of assets to buy them. So they have these income limits on them, but no asset limits. And that actually means there's kind of a perfect buyer out there, and the sort of person who would love to live in Manhattan, where a lot of these are. Low-income, high-asset, children of the affluent who are moving here to the city.
Okay, so let's say you are an aspiring, fill in the blank. And you moved to New York City after graduating from college. You're making, between $30,000 and $50,000 a year, scraping by in a lot of cases, but not really, because you perhaps have access to $500,000 from parents, from wealthy relatives. Like you lay out in your story, you're kind of the perfect fit to actually buy one of these homes, and you're getting it at a huge discount compared to a house that doesn't have this limits.
That's exactly right, Tim. And you raised another good point, which is that because some of these buildings still have some level of financial distress, banks won't lend to them. They can still be beautiful, lovely buildings that have a little bit of debt on the books, but that means you do need to have all cash, and they will sometimes advertise themselves as all cash only.
So you can't take a mortgage out to get one of these?
Well, for the more stabilized ones, you can, but in a lot of cases, you can't, and that's where you'll see them advertise. You must make, as you say, something like less than $60,000, but also have $500,000 cash or more on hand. It's quite an absurd situation as this has unfolded through history to our present moment.
So how many are taking advantage of, to some extent, gaming the system? Not illegal, but it's certainly not getting to the population that it was intended for. I mean, right? This is to help out those that are lower income. How much is it being gamed, basically?
Yeah, so the universe of these buildings is about 1,000, with about 17 or 18,000 units in them. To give you an idea, that's roughly twice the size of Stuyvesant Town, Peter Cooper Village for our listeners in the New York area. Very big multi-block complex in the city, a lot of units. But because they do offer such tremendous protection against rising costs in the city, even better than a rent-stabilized apartment, people do hold on to them for a very, very long time, and so they do trade infrequently. But kind of like how whenever a home sells in an up-and-coming neighborhood, and it always tends to go in one direction, up and up and up, these buildings are doing the same. And we're seeing that again and again, that even though these units trade infrequently, for the ones on the Upper West Side or Central Harlem or the East Village, these neighborhoods that in the 70s and 80s weren't places everybody wanted to be, but are now much more desirable places to be, you're seeing more and more of these deals.
So what do the parents say? Who did you talk to? I'm curious about that, right? Because that's who you really wanted to talk to. Or
yeah. I talked to one parent who, she had been a lawyer herself. Her husband had been a partner in an engineering firm, and they had a daughter who was a musician, and they were worried about her having uneven income, being in the city, but wanting to be in the city. So the daughter was able to pay $400,000 cash for a one-bedroom on the Upper West Side where she can have rehearsals away from her any roommates, and also not worry about, the very burdensome housing costs that exist for most renters or even owners in New York. And I also talked to a lot of musicians who have since become adults, a couple of them that have actually transitioned from being musicians into real estate brokers, specializing in exactly these kinds of units. One was a bass guitar player, one was a jazz flutist, and talk to them about, how this program has unspooled in a way that the city definitely didn't intend.
Well, it also seems like the rules aren't hard and fast. I mean, you do share the example of anecdotes of people printing out, TurboTax tax returns that potentially might not reflect a real income for somebody.
Mm-hmm. Yeah, and that's exactly right. So an ever-diminishing number of these buildings has formal regulatory agreements with the city that may require that they actually file documentation around this stuff. But the vast majority of them, especially the more expensive ones, no longer have any sort of regulatory agreement. And the city has basically thrown up its hands at trying to regulate these at all. So to the extent that there are even income caps on a lot of these days, they're essentially functioning on an honor system.
So it'll continue? So it's going to just continue? 20 seconds left here?
It's going to be very hard to put this one back in the bottle. You try to put price caps on these when there wasn't them before, you're going to get lawsuits, and it's not clear that the city wants to do that.
All right. Well, a very interesting story in terms of what's going on. Hey, Caleb, thank you. Caleb Melby, financial investigations reporter of Bloomberg News, on the road in St. Louis. And what?
I opened up my Twitter feed this morning, and this was like the story that everybody was talking about. A lot of rage tweeting.
Was there?
Yeah.
Yeah, well, understandably so.
Yeah.
All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Jobs Friday. We move into the final hour of trading on this October 8th. We have got the S&P higher now, barely up by 1 point. The Dow holding on to a 44-point gain, up by about 0.1%. NASDAQ lower by 34. The NASDAQ Composite Index down now by 0.2%. 10-years down 8/30 seconds. 10-year yield 1.60%. Stocks have been fluctuating. The Treasury yields gaining as weak jobs data upends bets on the Federal Reserve's policy plans. One area of concern in the jobs report was the female workforce participation rate. Here's U.S. Labor Secretary Marty Walsh, who was interviewed this morning on Bloomberg Television and Radio.
Well, I think schools are helping there. I think the schools being back in session. We saw the unemployment rate for women fall to 4.5%. We saw the unemployment rate for black women fall to 7.3%. So it's definitely going in the right direction, particularly where we were 3 months ago when we had 4 million women roughly out of the workforce. We're seeing lots more women come back into the workforce. That's a good sign for our economy. We need to continue that trend as we move forward.
While the report is unlikely to deter the Fed from announcing cutbacks to its bond buying next month, it may remove pressure for the central bank to raise rates anytime soon. Again, 10-year yield 1.60%. Spot gold up 0.1%, $17.57 the ounce. West Texas Intermediate crude up now by 1.4%, up $1.11 a barrel to $79.41. We did have WTI trading above $80 a barrel for the first time since November of 2014. Oil stocks, they're pushing higher. ExxonMobil, for example, up 2.6%. BP, across a broad swath of energy names here, up 2.1%. Chevron up by 2.4%. EOG Resources up 4.8%. And Pioneer Natural Resources up by 3.9%. Recapping stocks mixed, S&P up 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So you are listening to Bloomberg Business Week on this Friday, and this happens to be also among one of our most read on the Bloomberg. We were all talking about it. Certainly on our call. It's a story by Bloomberg's Simon Kennedy, and Tim, it notes that the U.S. were already in a recession based on consumer sentiment, which is based on a new study co-authored by former Bank of England policymaker Danny Blanchflower. He is professor of economics at Dartmouth College, and he joins us on the phone from Hanover, New Hampshire. Danny, nice to have you back. How are you? How are you?
Yes, I'm very good. I'm actually teaching class again. It's great.
I know. You're on campus. It's great.
I am looking out of my office window. Great.
So what's going on here? We're already in a recession?
Well, I called this earlier in the week with my co-author, Alex Bryson. I mean, the issue here is what actually can you use to say something about a recession coming before it hits? So the NBR dating group tells you 6 to 8 months to a year later. The labor market data tells you pretty much at the point that you turn, what can you use to predict it coming? And it turns out we can successfully, in the new paper we show, we successfully predict every one of the last 6 recessions beforehand. And essentially what we're seeing today is almost identical to what we saw in 2007 across the whole economy and particularly across the 8 biggest states. These measures of sentiment, what do people think is happening, turned around May. And that suggests that recession will probably start around Christmas time. So the predictors are almost exactly as they were in 2007, and this is how you can predict every prior recession to it. And so this prediction came well before, obviously a couple of days before the non-farm payrolls, which didn't surprise me, and I expect to see non-farm payrolls declining and probably going negative by the end of the year.
Going negative by the end of the year, wow. That's certainly a...
Yeah, I mean, the problem is obviously the labor market data isn't giving us a very good steer, but people don't seem to understand what's going on. There's base and composition effects. There's a couple of measures. If you go and look at total compensation, that's up by 1.9%, and on the last month it's flat. And if you go to hourly earnings using the current population survey, that's down 1.2% if you take Q2 2021 to Q2 2020. So there's a lot of indicators people have not been looking at. And the question is, what happened in 2007 and the previous 5? And the answer was these measures told you 6 to 9 months before it was coming that this was happening, and people should look in our paper. It's remarkable how comparable 2021 is compared to 2020. And in fact, there's a set of surveys, and it's really about women. It turns out that since the turn, women, 40% of people in a Grant Thornton survey said if they're forced to go back to the office, they won't go, they'll quit.
So for people,
in a survey,
Danny,
last bit, and in a conference board, women say especially that they're very fearful of going back to work. So I think that's what turned the Delta variant turned people.
So, Danny, for people who don't follow this as closely as you do, tell us the connection between how people feel about sentiment, what sentiment is about the economy, and how that translates into economic growth or spending.
Yeah, so we've done a lot of work on this. So sentiment is about, you ask people, what do you think's going on? What do you think's going on in your economy? Do you think that the jobs are good? Do you think the economic situation is good? And what do you expect to happen? And so what we see in these data from around the spring is that anxiety in the United States rises. People get more and more fearful, as I say, particularly about Delta. And the way to think of this is if people are anxious, if people fear that slowing's coming, slowing's going to come. If people think there's a recession coming, then a recession comes. So these data are really crucial. And every time this has happened before, that's what followed it. And it appears to be that the Delta variant and the thought that people might have to go back to work has made them incredibly anxious. And I think their spending patterns are going to change. And unless we see some big change, the fear of going back to work is a big deal. And people say, well, I'll quit my job if I have to, or I'll retire. And that's what we're seeing in the data.
And you think that stays with us much longer, or does it at some point, Danny, right itself? I mean, at some point, do we get beyond this fear? I mean, I guess what I'm asking you, is this going to be a protracted recession, or is this going to to be kind of a hit and run?
I don't know.
Yeah.
Carol, what a great question. I don't know. I mean, obviously, the issue in each of these cases is when do you go into it? How long is it going to last? And how quickly are you going to be able to assuage those fears? So I think the answer is that if you can't, it's going to go on for quite a long time. If you can, and people become confident that the virus has been solved, everything's okay, that's fine. But it appears in these data where people are very worried about having to go back to work, having to stop doing remote work. And I think that's a really big deal. I mean, the other thing is people have been talking about the Fed going to taper. Big error. Should we not be doing that? It's exactly a mistake they made in the Great Recession. Didn't spot it. Well, we know in these data, they told us in July 2007, they were forecasting a recession coming in December 2007. And the Fed, even by September 2008, hadn't worked it out. So we should be very fearful that the Fed will make an error again. It's absolutely clear in these data. The last thing they should be doing is even thinking about tapering.
So nothing for any of the meetings this year, in your view?
Well, absolutely not. And they should be thinking about whether necessary, what they can do about further stimulus.
Yeah, I'm trying to think. We've had a discussion with somebody else who said it's not going to be a case of pulling back, but reigniting some of the stimulative measures.
So, Danny, if the Fed does indeed go through with its taper measures later this year, and we are indeed in a recession already, help us paint a picture for what the U.S. economy looks like in a year.
Well, again, Carol, it's a very good question. I mean, in a way, we're pretty good at getting to the start. I mean, it's going to take a while to get out of this. It's going to take a while for the economy to pick back up.
Yeah.
I mean, I certainly think we're going to start to see unemployment rates rising. That's the big story, I think, and people being, wages are wage growth is certainly going to come down, and we're going to have to start to think about, I mean, obviously the impact of the stimulus, the measures being discussed in Congress. If you can get these infrastructure bills and spending bills in place, that will help to assuage this negative shock that's coming. But I think you've got to persuade people that they can go back to work safely. Otherwise, they're going to stop. They're going to stop spending. They're not going to go back to work. They're going to quit. And that's a big deal. People are frightened, and that's what's true in the data. People are frightened.
You do definitely see that people are having a hard time making sense of and clearly explaining what's going on in the labor market. Danny, thank you so much. I'm glad you're back at campus. Stay safe, and so glad to check in with you. Danny Blanchflower, professor of economics at Dartmouth College and former Bank of England policymaker. That story, you can find it too at Bloomberg.com.
Well, from New Hampshire to Washington, D.C., let's get a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. A former Wynn Resorts executive and a private equity investor have both been found guilty as part of the Varsity Blues scandal. That's the investigation into allegations that parents were cheating to get their kids into elite universities. Gamal Abdelaziz was convicted of conspiracy for paying $300,000 in bribes, while John Wilson was convicted for paying more than $1.2 million to get all three of his children into USC, Stanford, and Harvard. President Biden has won a victory on a global scale. Almost 140 countries are agreeing on a corporate tax rate of 15%. Former Treasury Secretary Larry Summers tells Bloomberg it will level the playing field.
The most important global economic agreement of the 21st century so far. It's important in reality because it's going to fortify tax collections from corporations for companies all over the world.
The U.S. Congress has yet to weigh in on the proposal. You can hear the full interview with Larry Summers on Bloomberg Wall Street Week at 6 p.m. Wall Street time right here on Bloomberg Radio. Two journalists have won this year's Nobel Peace Prize for fighting for freedom of expression. One of them was Maria Ressa, who has reported on the erosion of rights in the Philippines. She recently spoke in a podcast interview about her 30 years in journalism.
We have shown that this asymmetrical power, when the state's power is focused on journalists, that the way you fight back is by doing your job.
Risa shares the honor with journalist Dmitry Muratov, who covers Russia. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nance, thank you so much. So this story definitely coming up on our radar by our Katie Greifeld and Vildana Hyrick. And the two of them putting out a story. And this is something that we've been moving towards. We certainly have had conversations. We had it this week at Bloomberg Invest Global when I checked in with the head of Grayscale. After years of waiting for a U.S. Bitcoin ETF, the crypto community may finally get as many as 4 products in a matter of weeks. This month, the SEC, once again, though, has to approve, reject, or delay a set of applications for ETFs based on the largest digital currency. This time around, they all follow a format that SEC Chair Gary Gensler has indicated could be received favorably by the regulator.
Yeah, these products will hold Bitcoin futures rather than the digital asset itself. They're filed under the Investment Company Act of 1940. That's a route that offers higher investor protection, and all raising, Carol, in the hopes in the $6.7 trillion U.S. ETF industry and beyond that after years of delays, the world's largest market may finally be ready to join the party.
But it's futures.
Futures.
So we're not totally leaning in, embracing the actual coin or different digital coins, correct?
Yes, that's the way that I'm reading into it. And I think one thing that I think about in a conversation that I want to have is why would somebody buy products like this
when they can buy the actual?
Yeah, took the words right out of my mouth.
I don't know. Why would you? Some flexibility. Let's see.
Yeah.
I mean, ETF issuers and Michael Sonnenschein among them has been pushing to convert Grayscale, right, into an ETF. They have been pursuing Bitcoin ETFs for over 8 years now. It seems somewhat disingenuous, for the SEC to encourage more filings at this point, only to disapprove them. This is according to the president of the advisory firm, the ETF Store. I mean, it's been frustrating for these folks.
It has. It's a move that further raised hopes among crypto advocates. The regulator asked 2 issuers to withdraw their Ethereum futures ETF filings over the U.S. this summer, but made no such demands of similar Bitcoin-based applications.
We're definitely seeing those steps forward by the SEC. Gary Gensler, we've heard Jay Powell say he's not looking to ban anything, so we are increasingly seeing regulators weigh in and certainly opening up the doors for everyone.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Some users of Facebook's Instagram are experiencing issues with the service, this according to Down Detector, citing almost 25,000 complaints as of 2:57 p.m. Wall Street time. Earlier this week, you recall, Facebook's social media properties were offline for almost 6 hours. Facebook shares right now, they're up by about 0.7%. Developing story again, one we're keeping an eye on. Right now, though, let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed in quiet trade with the Dow currently up 56 points, S&P is up 1 point, and NASDAQ is lower by 39. The U.S. 10 yield at 1.6%. Gold is up 2 points. Transports rise 101. And Bitcoin is trading higher by 1%. Among the main 11 SP sectors, energy was the big winner today. Real estate and utilities were in the red. And leaders to the upside in the Dow, Chevron, and IBM, while Merck and Walgreens led to the downside. In other news, CNBC reported that SpaceX hit a valuation of $100 billion. And wrapping things up, GM rose as much as 4.9%. adding to yesterday's 4.7% gain. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. Have a great weekend. And to hear live breaking news over your Bloomberg Time Squawk, SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's time now for our weekly crypto update. It's brought to you by Interactive Brokers. Trade crypto for less coin with commissions, just 12 to 18 basis points, and no hidden spreads or markups. Learn more at ibkr.com/crypto. Well, let's talk more crypto. And joining us now to do that is Eric Irvin, the co-founder and chief investment officer of OnRamp Invest. Eric joins us on the phone from San Diego. OnRamp Invest is a fintech company. What it does is it provides education and access to people about crypto assets for financial planners. Eric, I've been talking a lot. We do talk a lot about crypto. I've been talking a lot about crypto on Quick Take Stock, our Quick Take show that airs each day at noon Eastern time. And one thing that I keep coming back to is the idea that there is so much confusion about what a cryptocurrency is, what is Bitcoin versus blockchain, what Ether versus Ethereum is. And I still think that there's so much room for the general consumer to actually understand more about the space. What are you guys doing at OnRamp Invest to raise awareness?
Yeah, and it's funny that you mentioned that. When I first got involved, we call it the rabbit hole, where first you start to dig in, and first you dismiss it, and then later on you kick yourself for dismissing it. But as you go deeper and deeper into the rabbit hole, it's a completely new financial system, right? And so you can't just take the conventional framework of what we know as an asset class and then just apply it here. So you have to almost like learn everything from scratch. So that's exactly what OnRamp Invest is doing, is just starting with the education. We're educating financial advisors so they can educate their clients about what is a crypto asset, what's a cryptocurrency, like you say, what's about big B Bitcoin versus little b Bitcoin, the blockchain itself, the network versus the token that trades on that network, and then just starting there, and then starting to open their eyes towards, all right, how does it behave in a portfolio, and how can your clients invest in it, and what about estate planning issues, and all of those different assets when clients can actually own an asset entirely themselves. They don't have to necessarily have it at a custodian. So yeah, really, that's the idea behind OnRamp Academy, and then there's the OnRamp platform, which gives people access so that they can invest in the asset class themselves, Eric, or through a custodian.
I have to jump in because I do find it interesting that even people who have been writing stories, doing lots of research, or, my colleagues who are super smart and just people in the, smart investors are still like, I don't quite get this crypto thing. So there is a lot of education that needs to be here. What seems to be the biggest thing, especially when it comes to, RIAs who've been so used to, asset classes that, we pretty much understand how this works for the most part. What seems to be the typical training and the things that they need to truly understand so that they can represent it well to their clients, especially in an environment where still regulators are trying to figure it out?
Yeah, and this is probably the first asset class. I used to be a financial advisor many years ago, and this is probably the first asset class that I can think of that the clients know more about it than the advisor. So the clients are coming to the advisor, asking them questions, and it's not necessarily about the advisor getting educated so that they can present why crypto makes sense or why it doesn't, or this asset versus that. It's really just how do they handle themselves as their clients are bringing questions to the table. And so that's one of the most interesting pieces of this is, this entire ecosystem grew up outside of the traditional financial system, and no one ever thought that it could become this $2 trillion asset class, and now here we are. But everything had to grow up outside, and so there's this chasm in between stock exchange and these crypto asset exchanges. Hence the demand for an ETF. Go get that Bitcoin, wrap it up, and bring it onto this exchange so I can talk about it and I can buy it. And that's really kind of like the unique piece here is it's more than just an investment vehicle. It's a whole tool that you can use.
Yeah.
Well, put on your financial advisor hat, put it back on for a second, grab it off the rack and throw it back on. Because earlier this week, our colleague Eric Schatzker here spoke with Dawn Fitzpatrick, the chief investment officer for George Soros' family office. She said that crypto has, quote, gone mainstream. And Eric came on our show and made the point that institutional investors are not ignoring crypto anymore, and they're allocating a small portion, whether it's 2% or 5%, what have you, to cryptocurrency. Translate that for the normal person and the normal person's portfolio. Do you suggest that everybody have a sliver of their assets in crypto?
Yeah, I do. I personally do, and I think the math kind of bears it out as well. I kind of talk about this rule of three, where no more than, if you've never invested in it and you don't understand it, then no more than 3% of your kind of investable net worth should go into this. And this is probably like your liquid investable net worth. And then commit to 3 years. Like, don't touch it for 3 years before you do anything. And then if you can, because it's so dang volatile, dollar cost average, so 3% of your discretionary income that you can apply to it. And if you can do that, then you'll probably end up with a pretty good outcome. But even if you don't, if you take more of a kind of an institutional approach, a smaller allocation like that, because it is not correlated, has meaningful benefits, especially if you're rebalancing on a regular basis because it's so volatile.
Hey, listen, we got to run. Eric, thank you so much, and look forward to checking with you again. Eric Irvin, he's co-founder, chief investment officer at OnRamp Invest, with us from San Diego. You're listening to Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Tick, 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 tick. 29 minutes left.
Yeah, almost there, but not quite.
Not quite. But we are getting even closer to the chart of the day. Dave Wilson's going to be back in just a moment, see what's on his mind on what's been an interesting day,
interesting and unusual. I want to hear what's on Charlie Pellet's mind for a check of the latest when it comes to the trading day. Here is Charlie Pellet.
It's always a dangerous question, what's on my mind, as everybody who works with me knows. Here's what's going on. We have got the Dow, the S&P higher now. We've got NASDAQ on the minus side with the S&P up 2 points right now. Little change. The Dow up 65, up 0.2%. NASDAQ down 40 points, drop there of 0.3%. Again, the S&P right now higher by 1 point. Treasury yield, zero on my mind. 10-year, 1.60%. Jobs on my mind, too. Stocks fluctuating. Treasury yields gaining as weak jobs data upends bets on the Federal Reserve's policy plans. West Texas Intermediate crude up 1.6%. Was trading back above $80 a barrel. 79.59 on WTI. Gold up $1.45 right now. 17.57 for the precious metal. Cannot ignore Bitcoin up 0.8%. 54,624 on Bitcoin. Global travel is slowly reopening. JetBlue's CEO saying this week he expects the U.S. to reopen to foreign travelers before Thanksgiving. It comes as the U.K. eases entry rules for 47 countries and territories that were subject to the tightest COVID-19 restrictions. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television and Radio this morning he was asked what is changing to allow so much travel.
I think you've got good testing. You've got vaccination that can be utilized as a prerequisite for travel. And so you can monitor people who are traveling much, much more carefully and accurately than we could have, let's say, 12 months ago. So all of those things put in place allows us to open up the economy and open up these things like travel.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names that we follow on a regular basis. Mixed picture, Pfizer down 0.5%. ADRs of its German partner BioNTech, they're up by less than 0.1%. AstraZeneca's ADRs up 0.5%. Moderna down now by 1.4%. J&J, little change, down 2 cents, virtually flat on the day. So again, recapping equities mixed. S&P up by less than 1 point. 10-year yield 1.60%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
Do it.
Show us your hands,
I'm not going to
Carol.
succumb. My hands are off my Google, my keyboard.
Well,
Who
in
is
that
it?
case, I'll just tell you it's Argent.
Oh, I wouldn't.
Yeah, it's a band that grew out of the Zombies back in the day. You may remember them. She's Not There.
Yeah. Well,
You know that song.
I know it just from people playing it because that's older. But I mean, this
It
song,
is.
this is a great song. Like the sound. I just
Yeah.
remember growing up playing outside, like I think with my Barbies in the backyard, to be quite honest.
Wow, we're
Alrighty
getting
then.
All right, I like it.
In that case, let's talk about why I picked it.
Why did you pick it?
Because, if you're one of these big tech companies, you may be needing to hold your head up about now. And Nick Colas might say, do that. And he's the co-founder of Data Trek Research. What he did is look at earnings estimates for the big five among technology. We're talking Amazon, Apple, Facebook, Google's owner Alphabet, and Microsoft. So, we're getting close to the start of third quarter earnings season. Now, not all these companies are on the calendar, but in terms of the latest quarter, right, you are talking about, in each case, analysts anticipating that earnings will be down from their previous fiscal quarter, so 3 months earlier, sequentially, you might say. And to Colas, that's just too much pessimism. That it figures the economy's doing okay, these companies are doing okay, that if you just look back over their history, you would figure that there would be growth at some point. Now, I should point out that the comparisons are based on what you would call GAAP earnings. So it's the bottom line as opposed to adjusted earnings, which we talk about a lot. And in a couple of cases, analysts are actually looking for earnings to be up on an adjusted basis. But at the end of the day, you could argue what really matters is those GAAP profits, generally accepted accounting
So he's
principles.
basically saying everybody's just too negative.
Yeah.
And he's saying they're going to do
lighten
fine.
up, people.
Yeah.
Yeah, on these companies specifically and on the S&P 500 more broadly, because you can make the same comparison and find the same result. In other words, that if you sort of put together all the earnings for those 500 companies and then give them the appropriate weights, you get a number, and it's actually down from the comparable number for the second quarter. So, it's just, there's too much pessimism around. You put it, exactly the right way. In any case, if you haven't seen this chart, folks, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Well, we're going to find out pretty soon, Dave.
Yeah, we will. Starting Tuesday with Fastenal, and then Wednesday, things start to pick up a little bit. JP Morgan,
Fastenal,
BlackRock,
not one of the big
Delta
five, though, right?
Airlines.
Yeah, we'll hear from Netflix on October 18th.
Yeah, I mean, there's going to be plenty more.
Yeah, we'll have plenty to talk about.
Oh, yeah.
Speaking of plenty to talk about, give us your stock of the day. You did a deep tease for it about a half hour ago.
It's a company called Encarta. That's Nkarta. The ticker is NKTX. It's the developer of cancer treatments, went public in July 2020, took off initially, but now as of today has given back almost the entire gain. And I should point out that all along the way, analysts have had nothing but buy ratings on the stock, and it didn't help. The story today, late yesterday, a company came out and said they would be out with some kind of results about an experimental blood cancer treatment in the middle of next year. Problem is, analysts were looking for numbers this year. So the idea that the timetable gets dragged out, not what investors wanted to see.
Folks, it's a biotech company. It takes a while.
It does, but I'll tell you, the losses didn't take long at all. And Carter's shares down more than 26.5%, just above. They got to $18.21. This company went public at $18.
Down 70% so far this year, and a big chunk of that because of what's happened today.
Yeah.
Dave, thank you so much. Look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at @TheOneDave.
Dave, have a great weekend.
Yeah.
Thank you.
Be well.
See you Tuesday.
All right. See you.
Ooh, long weekend.
Yeah.
Nice.
You going to leave watching or something?
Wedding.
Oh, okay.
Family
Have fun.
friend.
Congratulations. Let's go check the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. The White House says it will not assert executive privilege to prevent Trump-era documents from being acquired by the House committee investigating the January 6th Capitol attack. The White House sent a letter to the National Archives clearing the path for release of the Trump documents. Lawyers for the former president are expected to pursue legal challenges to block their release. Economists were way off in their predictions for today's unemployment numbers. There were only 194,000 non-farm payroll jobs added in September, when most were expecting 500,000. President Biden is welcoming the latest numbers, saying the survey was taken in a week that COVID-19 was still surging. Bloomberg's Irv Chapman has more from Washington.
The president focused on a statistic other than the less than hoped for 194,000 new jobs created by private industry.
Today's report has the unemployment rate down to 4.8%. Our recovery is moving forward, even in the face of a COVID pandemic. And working Americans are seeing their paychecks go up as well. The monthly totals bounce around, but if you take a look at the trend, it's solid.
The president also lauded the agreement to put off the day the federal government would be unable to pay its bills with borrowed money. In Washington, Irv Chapman, Bloomberg Radio.
The first trial in the Varsity Blues scandal has resulted in guilty verdicts. Two wealthy dads were found guilty today of participating in a conspiracy in which they fraudulently claimed their kids were star athletes in order to gain entry into the nation's most elite universities. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. This is a fun story by our Blake Schmidt on the Bloomberg terminal. And the Waldorf Astoria Hotel was owned by the Hilton family, right? Or like long time ago.
Oh, you're like testing my knowledge of this.
I know.
It's changed hands.
It's changed hands, and it's been going through a redo. It's kind of one of the, not kind of, it is one of the iconic properties, certainly hospitality properties in New York and maybe across the United States. Storied hotel brought by Anbang before its chairman was jailed, so now it's undergoing a vast renovation that is overseen by a state-backed enterprise. Put that all together.
Okay, so I want to just start with, it's a great feature, check it out, by our own Blake Schmidt. The visitor from China had billions to spend, and he expected more from the Waldorf Astoria. Wu Xiaohui wanted a fleet of Rolls Royces to whisk him from Metro New York from the airport to the storied Park Avenue Hotel, where princes and presidents have luxuriated. The billionaire never got the Rollses. He did get the Waldorf, one more grand trophy for a flush China looking to throw cash around.
That was then. Today, Wu, the man behind the stunning rise and even more spectacular fall of Anbang Insurance Group, is sitting in a Chinese prison, and the Waldorf is now in the hands of the Chinese state, and it stands as a monument to an era of corporate excess that is, as we know, being brought to an abrupt and painful end by Beijing and the markets. It's something President Xi has certainly put as a top priority.
Look no further than the property giant Evergrande Group. It's teetering, and the top two executives, another huge conglomerate, H&A Group, they've been taken into custody. The Waldorf now, though, is preparing for its next chapter.
Yeah, so he paid $2 billion for the Waldorf back in 2014. He dreamed of transforming it into a place for the Chinese elite. And it's going to have more apartments and maybe not as expansive as he initially planned on, but it's going to be very different. It's going to be, not really a hotel, but more like the transformation of what we saw in the plaza, right? Where it's people buy units and they're living there now.
Yeah, Eloise is gone from the plaza.
Eloise is never gone. Have you not been there? Eloise is never gone.
Okay, if she's still there, that's
Have you
good.
not had tea lately there?
No, I haven't.
You should. All right, check out. It is an incredible read.
Updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. We have got the S&P lower, the Dow higher, NASDAQ on the minus side. Stocks have been fluctuating. Treasury yields gaining as weak jobs data upends bets on the Fed's policy plans. Jobs Friday with the S&P now down 4 points, little change, down 0.1%. NASDAQ down 64, down 0.4. The Dow up 25, higher by 0.1%. 10-year yield 1.60%. Spot gold up 0.1%, up $1.37 the ounce to $17.57. Bitcoin up 0.7%, 54,542. And West Texas Intermediate crude up 1.7%, 79.61 a barrel. Chemocentric shares are surging the most since November 2019 after the drug developer won U.S. approval for Tavneos as a treatment for a rare autoimmune disorder. Shares of Chemocentrics up now by 97%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Progressive Democrats have spent weeks trying to advance a $3.5 trillion social policy bill. But with moderates balking at its cost, efforts are underway to develop a slimmer, less expensive alternative. It's important these changes don't rely on fiscal gimmickry and creative accounting. The Democrats' current plan would, in all likelihood, increase public borrowing and future public debt substantially. Certainly, some elements of their proposal are worthwhile and deserve support. But in the real world, governments must make judgment calls and trade-offs based on value per dollar spent. That in turn demands the kind of attention to detail that has been mostly absent in this debate. Far-reaching plans to reduce poverty, broaden economic opportunity, and expand public services call for comparably far-reaching plans to tax and spend prudently. Democrats should be honest about what that will demand. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
So just about 10 minutes left in today's trading session. It is time for the drive to the close. Let's get to it with Alan Lance, a friend of the show, research director at lanceglobal.com, president of Allen B. Lance and Associates. He's back with us on the phone from Toledo. You're going to explain the wackiness that we've seen in the markets as of late. I'm counting on you, Alan. How are you?
I'm doing well, thank you. It's been an amazing market. I mean, what we've seen is, a select group of bubbles that have formed and been popped and then resurrected. You saw that in the beginning of the year, with the SPAC arena, and then the IPO craze, and we had the mega tech names, the growth-oriented names that last month finally fell from grace. And I think that's what we're going to see in this type market. Bitcoin collapsed, and now it's pushing back up, and it's good for the investor. I like these rotational corrections. We expected more volatility the second half of 2021, and that's what we're getting, even a greater variety than we even expected.
Well, it's interesting that you mentioned Bitcoin, and we definitely have seen a big move up this week, and it continued to trend higher. I mean, we went back up above 50,000. Just crossing the Bloomberg, the Biden administration weighing an executive order executive order on cryptocurrencies as part of an effort to set up the government-wide approach to the white hat asset classes, according to people in the know. The proposed directive would charge federal agencies to study and offer recommendations on relevant areas of crypto, touching on financial regulation, economic innovation, and national security, according to those in the know. So it does feel like, Alan, and I know we tend to talk about much more traditional assets, but it does feel like whether it's the SEC and Gary Gensler, whether it's Jay Powell in a recent testimony up on Capitol Hill, we do see like regulators, those we look to for guidance, increasingly kind of stepping up and giving us some clarity, and they're not going to ban it, and they're thinking about, okay, how do we regulate it?
Yeah, I think it legitimizes the asset, and that's positive for the long term, and that's why you see it moving up. So you'll still have the volatility. I mean, a lot of this, even with natural gas prices, is short covering and what's going on, overseas. So it's really hard to anticipate these swings, especially the magnitude of them. But
well, do you invest in crypto?
No, we really haven't. We've had some clients that wanted to get involved, and we bought for them, into weakness. Don't really chase, so we use our same, long-term, defensive type strategies into that. But for our average client, no, we really haven't. I'd rather buy indirectly in ways that we think, like NVIDIA and what have you, that can benefit, but not, betting solely on Bitcoin or one asset class amongst that whole vertical.
The so-called, if you will, pitchfork or picks and shovels, right? Of
exactly.
Of the cryptocurrency boom. Hey, Alan, help us make sense of today's jobs report, because it's pretty much a head scratcher, a huge miss coming in at under 200,000 when economists surveyed by Bloomberg expected 500,000 in the market, not really knowing what to make of it. Does it change things for the Fed?
I think it might delay. It looked like that. They might do something more quickly than what they were talking about at the beginning of the year. With the latest Fed meetings, and it might get delayed. Obviously, they're going to wait for more data coming in. So, if that is a trend, obviously, I think it will change. But, it's been, again, so volatile, just like the stock market, that, we'll have to wait and see. Yesterday's numbers weren't bad, and then today's were, totally, the opposite. So it's a matter of, I think they're going to wait for more evidence.
All right, so it's tricky. If I look at the S&P 500, 308 names lower, 195 higher. These are just some basic stats on the market. 2 unchanged. So we are seeing increasingly a risk-off trade. We've talked about that 50-day moving average on the S&P 500, that trend line moving lower, even though we kind of moved, we did move back above it. People are making investment bets. There are stocks that are gaining. There are stocks that are losing. Where would you be putting money right now, Alan?
I still think it's a matter of being, just selecting the right companies that have a catalyst that's not yet recognized on Wall Street, and this way you can outpace the market, whether it's down or flat. I think it is going to be challenging. So I know last time we talked about Ball Corp, and that's moved up, and we bought some Tech Resources, which is a copper play, and I like real assets. We bought Merck near its lows, and it's moved up, with a catalyst. So I like the biotech special situations. I like Tudor Perenni, which is TPC. It's an infrastructure play, but also I think they're turning around some problems they had. So if you get the infrastructure, you got that catalyst. If you don't, I think the company specifically can be a special situation. And I think those are the areas you really got to concentrate in, instead of just playing, the broad market, which I think it's going to be difficult the second half of the year, and it's going to be flat to down, and you're going to see more days like today where you just have to be in the right areas.
So are you staying in those right areas, or are you using this as an opportunity to pull back your own holdings, build a little bit of cash, and wait for the market to move even lower?
Yeah, we've been raising cash this summer into the strength, so we use some of that for September sell-off, and if the market continued to advance and touch on new highs, we'd be pruning, especially areas that have done so well, and that's really paid off in the long run, and I think it will continue to just reduce risk when the markets are high, and then when there's panic selling, try to accumulate quality.
Hey, just quickly, just got about 30 seconds, Alan. There's still, though, we got some clarity out of D.C., but again, we've got a new clock ticking down to December. So it does feel like, in terms of those things that can create some uncertainty in the market, there's still a bunch out there for investors to have to deal with.
Incredible number of things out there, Carol. You got rising interest rates. You've got the situation with China. You got the supply chain items. I mean, it's just a long list, and that's why the second half of the year we said we're going to see volatility in both directions, not just up but down, and that it's time to really be selective and take some profits. And I don't think it's going to be an error to raise cash into any strength. I don't expect this to be 2008, 9, or 1999, but I do expect it a difficult market.
All right. Listen, always good to check in with you. Alan Lance, he is research director at lanceglobal.com, president of Allen B. Lance and Associates. All right, coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We are counting you down to the closing bell on this Friday, wrapping it up.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Gina Martin-Adams in today for Taylor Riggs, counting you down to the closing bell. Here to help take us beyond the bell, it's our global simulcast partners. Carol Master, Tim Stenovic, bringing together our audiences across all of the various platforms. And Carol, it's going to end up being a relatively up week here for the major indices, but still a mixed day here. And a lot of that, of course, traces back to what happened at about 8:30 a.m. Washington time.
That jobs report, we're going to talk a lot about it. I think it was a report, safe to say, that people are still scratching their heads over. And that's why you saw, what's fascinating, a fair amount of volatility in this market. But the VIX is still down about a point today, Tim, despite the back and forth that we saw.
Yeah, equity investors are certainly scratching their head about what to make of it, at least today. And what we saw in trading today, the S&P 500 moved between positive and negative territory more than a dozen times today.
Really vicious sector reactions, really, I think, are the story from the S&P 500, where it's kind of flat overall, but obvious rotation back into energy after a slower than average day yesterday, considering the last several weeks of gains, and rotation out of some of the growth names once again, perhaps in anticipation of earnings season, where these are expected to be the weaker players.
And also, you were pointing out so smartly, Gina, of yesterday, look at the wage inflation, look at the pressure that we're going to see boiling over it. And so I was promised, if we had a dramatic miss in terms of labor data, that yields would fall, and they haven't. They've risen, and instead we've got yield curve steepening, and we've got an anticipation of that inflation, perhaps.
Yeah, absolutely. In fairness, they did fall initially, and then people decided, well, maybe they should rise. A steepening yield curve pretty much all around. When you talk about the stocks moving, it's a lot of energy names that are higher on the day and on the week and to the downside. It's kind of a hodgepodge of consumer discretionary and tech names. The closing bells right now here on this Friday afternoon, you're going to get about 34,741 on the Dow Jones Industrial Average. That's down roughly about 5 or 6 points as we wait for these numbers to settle. That's basically unchanged on the day. S&P 500 down about 0.1% or 8 points at 43.91. And the NASDAQ Composite going to finish the day down by about 0.5% here, 14,579. Again, we should point out on a weekly basis, all three of those indices are higher on a weekly basis. The Russell 2000, though, down on the day, down on the week as well, Carol.
Right, and let's not forget that, was it just last week we saw about a 2.2% decline on the S&P 500, so a move back again. We've talked about this throughout this week. I've got to think that the technicians are just pulling it out and trying to figure out where does the trend line go next. We just had on Alan Lance, and he said he's going to anticipate seeing more volatility throughout the end of the year, but you're going to see big moves up, big moves down, Tim.
Yeah, and look, the big question is what happens for the remainder of the year. And Alan Lance saying he used the last few months as an opportunity to actually raise cash to save for those moments when he thinks the market is going to move lower, Gina.
Right, and look at this GRR screen on the terminal. All about oil and gas companies, all about energy doing well today. When I look at a deeper level of performance, top 5 smaller industry groups all have oil and gas in their names. It's really all about the surge in energy prices, oil going higher. And I think we're going to start to question, once we go beyond $80, we start to question how sustainable we can see growth hold up in the face of that. And we're seeing that play out on the bottom end of the GRR with household names, cable, trucking, apparel names, all very sensitive to energy cost taking over the consumer wallet. If the energy cost is too much, they have to cut back elsewhere, and we probably start to see that play out.
Yeah, the elasticity of demand. I'm thinking about, what you learn in your economics class. When does that become problematic? Interesting day, certainly, in the overall trade. So as for gainers, I looked at a lot of those Chinese names because once again, we continue to see Chinese stocks coming back again. Baidu, JD.com, among those in the top of the NASDAQ 100. Baidu alone was up about 3.6% in today's trade. Of course, we're talking about the ADRs that trade here. Not really seeing anything particular. There was one story noting that Baidu and JD.com are companies that are returning to investors in an elevator ad firm, but we have seen maybe some relief as U.S. and China are talking to some extent again, so we'll keep an eye on that group. Automakers, man, they have been on a tear in the last couple of days. GM alone up roughly about 8.5% in the last 2 days. Ford up about just shy of 8%. GM, you can see another 3.8%. Again, it's that rotation to some extent that we've been seeing as investors check out some of those value names. And want to mention Sundial Growers. It's a small cap, about $1.4 billion.
You're into that.
Yeah, well, not personally.
No judgment.
It's a Canadian cannabis producer buying a liquor and pot retailer, Alcanna, for $276 million stock. You've heard about it, or you've done some research?
No, well,
I don't know what's allowed in New Jersey and what's not allowed in New Jersey, Carol.
A lot of things are allowed.
Economic warfare.
Sundial, by the way, for our radio audience, up 5%. It was up 15% though at one point today.
Well, you heard Gina Martin Adams talk a little bit about the pressure that telecom was facing today. I want to talk about Charter, finishing the day down by more than 4.8%. It got a double downgrade to underweight from overweight at Wells Fargo. Wells Fargo is, quote, taking a more bearish stance on the entire cable sector's outlook, and we saw movements throughout the sector as a result. Wells Fargo cutting its price target on Charter from $848 to $665. Analyst says that we can expect residential broadband growth to slow, which would force free cash flow estimates lower. Comcast also taking a hit as a result of that today, finishing the day down by more than 4.7%. And SiriusXM shares falling by 3.6% after an analyst at JP Morgan cut the company to neutral from overweight, citing lower estimates for self-pay subscriber additions. That's due to slowing new car sales, interestingly enough, as well as higher CapEx. Caroline, they also lowered the price target for December of 2022 to $7 from $8, Caroline.
On the downside in the equity market, let's look at what's the downside in the FX market. Go cross asset, Japanese yen, off by 0.5% today. That as we see yields push higher in the United States, we see oil push higher, Japanese yen, therefore at like a 2-year low versus the US dollar. What's on the upside? The Canadian dollar up 0.6%. Loonie doing well was mainly because the jobs market, not as good as we thought it would be here in the US, but it's going well in Canada. And in fact, they're back to pre-pandemic levels. Canadian loonie up. And we indeed see it also up. Why? Because oil is rising. Let's get across to the commodity spectrum, because I'm looking for my radio audience out there, up 1.5% on WTI crude, $79.49, basically $80 a barrel. We haven't seen these sorts of levels in years. This is we once again see these supply chain issues, these worries about the supply side. And at the same time, OPEC Plus isn't going to be raising production as quickly as any had anticipated. We're seeing Brent crude have a good day, $82 is where we trade. Actually, metals having a pretty good day. Interesting that Freeport-McMoran is saying, look, China's copper market, it's actually not nearly as bad as you expect. Steel up 1.75%. And notably, sovereign bonds across the board, yields in the UK, gilts up. We rise in Canada, we rise in Japan. Money moves out of the bond market remain.
Yeah, the trend line has been pretty persistent here. You take a look at some of the weekly moves that we're seeing here, about 13 basis points on your 30-year yield. The belly of the curve, you're getting about 12 basis points. And of course, on that 10-year, we're up about 14 basis points here. 1, 2, 3, 4, 5, 6, 7. Counting them off here. 7 straight weeks of gains here on your 10-year yield here. You talk about the steepening of that yield curve again. You're talking about a 210 that's now back to some of those June levels, the 530s, only back to where we were at the beginning of September here. But the trend line certainly moving higher.
All right, so let's go back to the jobs report. This was certainly what set the trend for today's trade and so many of today's conversations. Speaking of conversation, Bloomberg's David Weston caught up with former U.S. Treasury Secretary Larry Summers. He had something to say about the report. Check it out.
We got a lot of demand. We don't have so much supply. That's why the unemployment rate came down more than people expected. That's why the wage growth was much higher than people expected.
So, of course, that's Larry Summers speaking to David Weston. The jobs report, there's so many people talking about women leaving the workforce, and you do wonder about where are those people who are no longer getting benefits? Why aren't they getting jobs, applying for jobs? I mean, the one caveat is we have to remember that monthly jobs report, it's 1 week in time early in the month, and so maybe we're not really seeing what happened later in the month, and we'll have to see what the October data for this month really shows.
Yeah, we talked to Peter Quigley over at the staffing firm Kelly on our show earlier today, and he made the point that the month of September was sort of the second bookend, Gina, for the Delta variant. And to Carol's point, we might not have seen the data of people actually getting back to work when their kids do go back to school. And he says, in fact, don't even wait until the October jobs report. We might not see that show up until the November jobs report.
You know, what I thought was so interesting about today is all of the discussion really centered around Delta. So it's all excuses because it's all, that's the Delta variant, it's the Delta variant. It's the same thing we've been saying for the last couple of months now. When will it not be the Delta variant is the big question. And I think, when you think in the grand scheme of things, to get 200,000 jobs, that's about the average pace of job growth that we saw last cycle. What if we never have those big 500,000 job growth months again? If we are just settling into our normal expansion pace and can't get those jobs back? That's what I'm worried about.
And what if we can't lure people back into the workforce? What if they keep dropping out? What if they keep dropping out when it's women in the workforce, when it's people of color in the workforce? The inequality just seems to be amplifying right now instead of being drawn back. And I really focus hope and if we see indeed that improve into the next month.
Yeah, I think a lot of people are also trying to look at the sort of historical trends and trying to decide where we should be now. But I think when we look back at where we are in this day and age right now, we're talking about major structural shifts here, not only in our economy, but really just in how we live our lives. And that's probably having a much bigger effect on those numbers.
All right. Well, certainly we're going to have some new numbers next week. We'll get reads on inflation with CPI, a lot to look forward to. And we'll also get into all of those earnings. And then we'll have William Shatner going up into space. And who knows what that could mean?
When is that happening?
I think that's on Tuesday.
Did you see SpaceX? Did you see SpaceX's valuation?
100. What do you call a unicorn 100 times over? There needs to be a new name, right?
Decacorn, isn't it?
100. What is it? $100.3 billion valuation.
$100 billion. A secondary share sale.
No.
All right, we got to run, guys. Have a great weekend, everyone. That's going to do it for our cross-platform coverage on radio, on TV, on YouTube. Check us out Beyond the Bell again on Monday, same time, same place.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I'm feeling a little worn out.
Would you go to space?
We've talked about this, absolutely.
In a heartbeat. Even after everything that we've...
Like what?
More so?
What?
I don't know.
Like what? What are you afraid of?
Going to space?
Only live once.
No, I would do it. I would do it.
Just to be able to look back at Earth and see it.
Oh, even for 11 minutes.
All right, Nancy Lyons, I don't know if you'd go off into space.
I'm not going anytime soon.
All right, what do you got for World of Nat?
Anyway, well, President Biden is rejecting former President Donald Trump's request to block documents from the House committee investigating the January 6th attack on the U.S. Capitol. White House Press Secretary Jen Psaki.
The president's dedicated to ensuring that something like that could never happen again, which is why the administration is cooperating with ongoing investigations, including the January 6th Select Committee, to bring to light what happened. As a part of this process, the president has determined that an assertion of executive privilege is not warranted for the first set of documents from the Trump White House.
Psaki says this is an ongoing process. A court fight is expected from President Trump's attorneys. Well, President Biden has his own take on what experts say are disappointing job numbers for September. Only 194,000 jobs were added. He says the cutoff date for those numbers came at a time when the Delta variant was still creating havoc and vaccine mandates had not yet begun.
COVID cases were averaging more than 150,000 per day. Since then, we've seen the daily cases fall by more than 1/3, and they're continuing to trend down.
Biden was pleased that the unemployment rate has dropped to 4.8%. Two wealthy parents have been convicted of buying their kids' way into school as athletic recruits in order to gain entrance into elite universities. It is the first case to go to trial in the college admissions cheating scandal known as Varsity Blues. Gamal Abdelaziz, a former casino executive, and John Wilson, a former Staples executive, were found guilty. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Folks, we were talking about electric bikes in the break, and I just want to say, if you have some thoughts, tweet at Tim Stanovic and at Carol Masser, because we're just saying that how on the streets it can be a little crazy.
Look, I've been cycling in New York City for a dozen years at this point, and over the last few years, there's been a big change in bike lanes, and it's the advent of electric bikes, pedal assist bikes. This is not the pedal assist bikes that are like the city bikes, right? These are the electric bikes that go like 30 miles an hour.
Whiz by.
And people have gas-powered motorcycle things that are, you know.
I've seen them almost be hit. I've almost been hit by them. Like it's just, anyway, okay. We weren't planning to go there, so I'm really sorry, Reg, because that wasn't the story we were planning to do. What we did want to talk about, speaking about, you know, racing around, Elon Musk, we're talking about his SpaceX hitting a $100 billion valuation in a secondary sale.
The shares were offered at $560 each, this according to a person with knowledge of the matter. That's 33% above the $420 share price. That was just back in February. That valued the company at $74 billion.
Yeah. Space Exploration Technologies, the company is formerly known, did not respond to requests for comment. That secondary sale, though, coming ahead of the Hawthorne, California-based company's third rotation of astronauts for NASA on October 30th. It gives SpaceX a higher market value than the roughly $97 billion of Lockheed Martin, the world's largest pure-play defense contractor.
Yeah, that's a really good way to think about it, right? A really good peer comp. That's where SpaceX is now. What do you think the future is for SpaceX? This is a company that's going to have to IPO.
And they're increasingly doing things for the government and have figured a way to go back and forth, right? And bringing things up and working with satellites and so on and so forth. And our world is increasingly based on that. So, you know, the government kind of outsourcing so much of what it would have done in the past.
Well, listen to the investors that are included on SpaceX's cap table. Sequoia Capital, T. Rowe Price, Ontario Teachers Pension Plan, Alphabet, and Bailey Gifford, among others. That's according to PitchBook.
No, it's interesting to see all things Elon and how they continue to evolve. We're going to actually talk a little bit about it because he held an annual shareholder with Tesla investors, so we're going to get the latest on that. You're listening to Bloomberg Business Week. Carol Masser, Tim Stanovic. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelota. Move lower on this Jobs Friday. Treasury yields gained after weak jobs data upended bets on the Fed's policy plans. S&P down 8 to end the week. Head into the weekend at 43.91. The S&P falling today by 0.2%. The Dow lower by 8, down less than 0.1%. Nasdaq down 74, a drop of 0.5%. 10-year yield 1.60%. Spot gold up 83 cents. Little change, $17.56 the ounce. Crude up 1.5% today, $79.50 for a barrel of WTI. Bitcoin 54,647. Bitcoin up by 0.9%. Sources tell Bloomberg the Biden administration is weighing an executive order on cryptocurrencies as part of an effort to set up a government-wide approach to the white-hot asset class. And Walt Disney is going to charge theme park guests as much as $15 a ride to get on an express line at its most popular attractions. Disney shares down today by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So Tesla making it official. They're moving their headquarters to Texas.
Dana Hull is technology reporter for Bloomberg News. She joins us on the phone from our San Francisco bureau. Dana, my first question for you, does this mean you're going to have to move to Texas?
Huh. Everyone keeps asking.
Oh, they do? I'm not the only one? Oh, sorry. Should I say, I don't want to offend anyone, get to move to Texas?
You know, I own a house in the Bay Area, for which I am extremely fortunate, and I have a kid in high school, so I am not planning to move to Austin, but I look forward to visiting.
Well, okay, well, you know, Elon Musk did make the point that Tesla, even though Tesla is moving to Texas, it will still try to grow in California, right?
Yeah, I mean, I think that, so to be honest, first of all, this move was not a surprise. I mean, I've been sending the bat signal about this for about 18 months.
That's true. To be fair, right?
What people have to remember is, Tesla kind of bought this old factory that used to belong to a joint venture between GM and Toyota back in 2010, and that factory employs 10,000 people, and it really is kind of like bursting at the seams. And a lot of the employees who work there commute from long distances, and it's just, the Bay Area is a very dense place where the cost of housing is incredibly high. Now Tesla is building this brand new state-of-the-art factory in Austin on the Colorado River with their in-house architect. And, of course you're going to want your corporate headquarters to be where the shiny new place is. And, let's not forget that Musk himself moved to Texas. Texas does not have a state income tax. He's the richest person in the world. And, this is a guy who's been, living on planes for much of his adult life, and I think it makes sense that he kind of wants to consolidate operations.
Is he finally going to get a house?
He has a primary residence in Boca Chica, which is where SpaceX is building its next generation rocket, the rocket that's going to take everybody to Mars.
The SpaceX that, according to reports and those in the know, hit $100 billion valuation.
Yeah, it's always had a very high valuation. Okay. It's always been one of the most valuable privately held companies in the U.S. But the secondary round, I think, pushed it over $100 billion.
Hey, listen, at that shareholder meeting, all right. So obviously the headquarters things, as you said, you have been sending up the bat signals for some time. We've talked about it before. What else was relevant? You think important that our audience, the Bloomberg audience, needs to be aware of?
Yeah, I think what was really interesting was that, they sort of very briefly dispensed of these shareholder resolutions without giving them much attention at all. But one of them passed, and it was, Calvert Management is asking Tesla to be more transparent about how it reports its diversity figures. They don't want just an annual DEI report. They want the EEO1 data that companies already report to the EEOC, and that appeared to have passed. We'll get an 8K with the final vote tally within 4 business days, but that's a big deal. That's the first time that a shareholder resolution pushing Tesla to kind of improve its diversity reporting has managed to get a majority vote. So that was significant. I mean, he talked a lot about how the chip shortage has really been a pain, but also the ship shortage, meaning, there's all this congestion at the ports, and just wrangling enough ships to ship cars around the world has been a big challenge. So that was pretty interesting. There wasn't really any new update on the timeline for when the factory in Austin and a factory in Berlin are going to be finished, nor when we're going to see like the Cybertruck. So it was like a meeting with like a lot of information and nuggets, but not like any new firm timeline, which I think is why you're seeing the kind of share reaction pretty muted today.
Yeah, we didn't see anything. We saw Tesla open higher, but it was down for much of the day today. And do you attribute that to just not really much actual news happening at the event?
Yeah, it's like I think people are like, well, what's the next catalyst? Like, what's the next catalyst? And there's not a firm time frame on that. And also, we don't have a time frame for like when this corporate headquarters is moving. I mean, they didn't give any time frame of when this actual move is going to happen.
What it was really a bummer is that I didn't hear anything more about the Tesla bot.
Nope.
I gotta say, it's still one of my favorite videos.
Using air quotes for bot.
Yeah.
No, listen, it's fascinating. I still feel like, whether it's a car company or what have you, or whether it's satellites or space, like it's constantly, everything's compared to Tesla and Elon Musk, Dana. Like that is still the benchmark.
I mean,
is that fair? Even with, if you look at the car industry, certainly there's been a lot of progress in terms of the EVs and so on, and autonomous driving, but it still feels like everybody still rates themselves using the benchmark of Elon and Tesla.
Yeah, I mean, I think he's just sort of like a uniquely singular CEO in that he's running two companies simultaneously, and it's kind of rare to have someone like that, right? Like you're disrupting the auto industry while you're disrupting aerospace, while you're getting into satellites. Like, he's just got tentacles in all different kinds of industries. And after dismissing him and making fun of him for quite some time, now everyone is, kind of racing to beat him. Yeah, I mean, I don't know. I don't know if benchmark is quite the right word, but certainly, he has been a disruptive force for many industries, and has just really kind of shepherded in this sea change in terms of how people do business.
Hey, was the meeting virtual or in person?
It was virtual in that most shareholders were not there, but there were about 50 to 100 people in the audience. I mean, the board members were there. There were executives sitting there. I mean, so he was speaking before. It looked like roughly 100 people.
Okay. And you sure you haven't bought any cowboy boots?
I think Kimball is the person who...
I saw that.
Kimball must, yes.
I don't know if you saw Kimball's belt buckle that he tweeted about, yeah.
Pretty funny. Hey, listen, thank you so much. Really appreciate it. Bloomberg News technology reporter Dana Hull on the phone in San Francisco. And as Tim mentioned, Tesla shares, we didn't really see, they were up about 1/3 right off the bat at the open. And they're still trading, though, now down about 1%.
Yeah, moved lower than the market did today.
Austin, not a bad place.
A lot of people moving there.
A lot of people. All right, you are listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, great guest coming up. Stick around. We're going to talk about risk.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is really a fantastic way for us to wrap up our week. A friend of the show, I've talked to him a few times, Stanley McChrystal, retired back in 2010, four-star general in the U.S. Army, and he's written several books about leadership, and he's got a new book that's just out that deals with risk, which makes so much sense right now.
We talk to doctors each and every day, and they say, answer our questions about the COVID crisis with what is your risk tolerance? How do you think about risk? So I want to know how he thinks about risk.
All right, we're going to get into it with him in just a moment. First up, though, Charlie Pellet. What's on your mind?
What's on my mind is keeping track of the markets, Carol Master, because that's what we do here at Bloomberg. The Dow, the S&P, NASDAQ, risk off today with the S&P down 8, drop there of just about 0.2%. Little changed. That's the key takeaway on this Jobs Friday. Stocks fell. Treasury yields gained after weak jobs data. Upended bets on the Federal Reserve's policy plans. Sarah Hunt is portfolio manager at Alpine Woods Capital Investors. And on Bloomberg Television and Radio this morning, she talked about the September jobs report and the Federal Reserve.
You've got a combination of the Delta variant. You had those big storms that went through, and that can affect some of the numbers. You've got some very strange seasonal adjustments because of what happened last year. So I think that there's a lot up in the air, and they're not going to have the data for October by November. But I think that the economy is not in such bad shape that it doesn't seem like getting rid of some of those emergency COVID measures at this point is probably not a bad idea.
The S&P 500 and NASDAQ 100 declined in turbulent trading as data showed employers added far fewer jobs than anticipated last month. Today, the S&P fell 8 points, down 0.2%. Dow Industrials down 8, down less than 0.1%. NASDAQ tumbled 74, down 0.5%. The NASDAQ 100 index was down 0.5%. 10-year yield now 1.61%. Gold, spot gold, little changed, up 87 cents, 17.56 the ounce. West Texas Intermediate crude up 1.6%, 79.52 a barrel. Bitcoin up by 0.5%. A topic we were just talking about, Tesla. CEO Elon Musk says a double whammy of a global shortage of chips, and chips is the only thing standing in the way of Tesla maintaining sales growth in excess of 50%. He made that comment to Tesla's annual shareholder meeting in Austin. Also said Tesla is leaving California for Texas. Tesla shares today down by 1%. Recapping, 10-year up to 1.61%. S&P down 8, drop there of 0.2. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, safe to say our next guest knows an awful lot about the subject of risk, dealing with it, facing it, managing it, and now writing about it. His new book is entitled Risk, A User's Guide. So delighted to have back with us and to be talking with him again, four-star Army General Stanley McChrystal, former commander of the Joint Special Operations in Iraq, founder of the McChrystal Group, author of several other books, including Leaders, Myth, and Reality, among them. General McChrystal joining us on the phone in New York City. General McChrystal, so nice to have you back here on Bloomberg. How are you?
Well, Carol, it's an honor to be with you.
Well, same here. Tim and I are delighted to talking with you. Hey, before we get into the book, we would appreciate your thoughts on the U.S. withdrawal from Afghanistan. You understand what it's like to be on the line directly in the fight for something. Was it a mistake, that withdrawal?
Well, let me say first, I think like most veterans and people involved, I was sad to see the way it played out overall, because many of us became very emotionally connected with Afghanistan. So it's important to remember that, because I also would tell you that's one of the reasons my views are biased by my personal opinion. I think that it's unfortunate we pulled out, but I would say that I think President Biden made a courageous decision. I mean, the accord that was signed in Doha by President Trump's administration essentially set a hard date of 1 May 2021. So President Biden was faced with the choice of either abrogating that agreement and extending the war, or following it, which is essentially what he did. People have asked me if I agreed with it, and my answer is I respect the decision by the commander-in-chief. It's not the recommendation I would have made, but that's the way our system's supposed to work. Military leaders provide best advice, and then the president decides.
The top U.S. military officer, we're talking about General Mark Milley, chairman of the Joint Chiefs of Staff, he called the 20-year war in Afghanistan a strategic failure. Why was that? And do you agree?
Well, I couldn't argue with the fact that it was a failure. If I tried to say, no, it's a success, I think that'd be disingenuous. However, I will say that it wasn't completely for naught. Afghanistan's a very different country than it was in 2001 when we went back. So the reality is the 20 years of educational opportunities for females, for young people, and other advances, the Taliban are going to try to control a very different state. And I'm hopeful in the long term that either causes them to change the way they lead or opens opportunities for different governance.
I'm wondering, General McChrystal, if the way that the United States left Afghanistan, if it tarnishes the United States' reputation in the view of countries around the world.
Yeah, it certainly doesn't help. There were some miscalculations that came out, and I don't find fault with the planning, but, things happen. But the reality is when people see it from afar, whether they are our potential enemies, in which case they might think less of us, or our potential allies, and they are trying to decide if we are a reliable, capable partner. So in a very public world, as I'll describe it, every time you have a challenge like that, it has some effect on your reputation. So like a commercial firm, we now need to work on that. We need to pay attention and work to try to recover a bit of lost ground there.
Well, the world continues to find itself in some incredibly risky situations. Your book is all about it. And I think about whether it was the financial crisis, the pandemic that we're still dealing with, today's increasingly crisis within the energy sector, cyber attacks. Are leaders ignoring the signs, or are there systems for detecting risk not good currently, focusing on the wrong signs and methodologies, or risk in terms of obviously like pulling out of something like Afghanistan? We've got about 50, 60 seconds, and then we'll come back and talk some more.
Yeah, I would say first, we don't assess risk very well because we're always externally trying to predict what they will be and when they'll come. And that's really just too hard because they're too varied. I think we need to be looking internal more.
All right, we're going to leave it on that note. We're going to come back with General Stanley McChrystal. He's going to stay with us, former commander of the Joint Special Operations in Iraq, Risk, a User's Guide. This is his new book that is just out and really looks at how people have been detecting risk, certainly leadership, and how that maybe is not leading them to make the best decisions.
And what are those lessons that we can take from what General McChrystal found, what he writes about, and apply them to our own lives, both when we think about assessing risk as parents, as members of family, when we're trying to stay healthy when it comes to COVID, but also as business leaders, as we try to prevent any sort of tragedy or adverse event happening at our own offices.
And the book specifically has got 10 risk control factors. I don't know that we'll get to all of them, but we'll certainly talk a little bit more about his thinking and his thesis for this book. All right, you are listening to Bloomberg Business Week. Let's get back to world and national news. Nancy Lyons in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. President Biden is restoring protections for two national monuments in Utah, Bears Ears and the Grand Staircase Escalante, as well as protections for a marine monument off the coast of Massachusetts. Former President Trump reduced the size of the monuments when he was in office, and he allowed commercial fishing in the northeast canyons and seamounts. Today, President Biden said protecting them is important.
There are more than natural wonders. They're the birthright we pass from generation to generation, the birthright of every American.
Biden said protection of public lands must not become a pendulum that swings back and forth depending on who's in office. U.S. employers added just 194,000 jobs in September. It is the second straight month of an extremely small gain, and evidence the pandemic still has a grip on the economy. Many companies are still struggling to fill millions of open jobs. The unemployment rate did go down. It's now at 4.8%. President Biden has won a victory on a global scale. Almost 140 countries are agreeing on a corporate tax rate of 15%. Former Treasury Secretary Larry Summers tells Bloomberg it will level the playing field.
The most important global economic agreement of the 21st century so far. It's important in reality because it's going to fortify tax collections from corporations for companies all over the world.
The U.S. Congress has yet to weigh in. You can hear the full interview with Larry Summers on Bloomberg Wall Street Week at 6 p.m. right here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. We're going to continue talking with General Stanley McChrystal just quickly here, and then we'll bring him back for some more. He's former commander of the Joint Special Operations in Iraq. His new book is Risk, a User's Guide. Stan, we have a couple of minutes now, and then we'll come back and talk more. You do detail 10 risk control factors. One that caught my attention is diversity. We are talking a lot about diversity. What is it that you think a leader needs to keep in mind when it comes to diversity and assessing risk? And again, just got about a minute or so here.
I think we think about diversity too often as just gender or race or religious background. We're really talking about different perspectives. And so if we talk about bringing together a team, we'll call it a board of directors or anything else. If you have diversity on a superficial level of gender and whatnot, you might not have diversity of perspective. You might have people all from the same background, all bankers, all whatever. And so what they'll do is they'll leave blind spots. And diversity needs to be thought of not as equality. Equality is a legal right and a moral right. Diversity is an operational necessity for organizations. So it's ensuring that you've got people that are looking from every different angle and bring different experience and expertise.
You know, I think about that a lot with corporate boards where it's like, okay, if you pony up an X amount of dollars, but certainly for some nonprofits, you know, then you get to be on a board. But I think, don't you cut out a certain sector of the population by basically, you know, just keeping in those that can afford it? And just quickly.
That's exactly right. You know, you self-limit.
All right. We're going to continue. Sit tight for a second. We're going to come back with General Stanley McChrystal, retired four-star Army general, former commander of the Joint Special Operations in Iraq. He's got another book out really talking about something that is such a timely topic, Tim. It's called Risk, a User's Guide.
He's also the best-selling author of Team of Teams and My Share of the Task. Really interested to hear more from the framework and how we can take those lessons into account when we're thinking about our own lives.
And there's so many big issues, whether it's climate change, whether it's cybersecurity that are being thrown at us, and we really have to be prepared in a smart way when it comes to risk. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A down Friday, a jobs Friday, turned out to be an up week for the Dow, the S&P, and NASDAQ. For NASDAQ this week, up 0.1%. The S&P did a little bit better, up by 0.8%. The Dow this week, up 1.2%. Today, those stocks fell. Treasury yields gained after weak jobs data. Upended bets on the Federal Reserve's policy plans. 10-year yield, 1.61%. S&P down 8, down 0.2%. The Dow down 8, down less than 0.1%, while NASDAQ declined 74 points, down 0.5%. Spot gold at $17.56 the ounce, up 78 cents right now. West Texas Intermediate crude oil up 1.5%, $79.49 a barrel. Chemocentric shares surged the most since November 2019 after the drug developer won government approval for Tavneos as a treatment for a rare autoimmune disorder. Shares of the company rallied today by 95.97%. Recapping, S&P down 8, down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest. Still with us is General Stanley McChrystal, former commander of the Joint Special Operations in Iraq. He's also, of course, founder of the McChrystal Group, author of many books, 4-star Army general, and his new book is called Risk, A User's Guide, and he joins us still on the phone in New York City. Have a question for you, and, I'm going to give credit where credit's due because your team kind of shared some thoughts with us, but one of the things that came to their mind, and we think this is just spot on, is how do you feel U.S. leadership dealt with COVID-19 and what could have been done differently? Because there were obviously a lot of risks, and we're still dealing with that risk. Tim was saying to me in the break, every time we walk out the door, we're assessing, might I be exposed to COVID or something, a new variant, and what that might mean.
Yeah, that's a great question. I think they fumbled it pretty badly. If you think about COVID-19, although it is a dangerous risk, it's not 10 feet tall, it's not unbeatable, and it wasn't unexpected. We have this kind of challenge every few years. And we know a lot about public health, so we actually know what to do about it. And then, of course, we got the help with the scientific miracle of a fast vaccine. But if you think about from the beginning, what we really needed was clear communication, even admitting what we don't know, informing the national population, and then we needed a clear narrative. How is our nation going to deal with that? Tell people, if we want to use a war analogy, as I think would have been appropriate, we ask every American to take part in the common defense of every other American. And then, of course, we go down the willingness to make decisions, overcome the inertia that sometimes causes us issues, and the ability to be adaptable as things change, like the rise of the Delta variant. In almost every case, we fumbled it pretty badly. And I would argue that the 700,000 Americans that we have lost is far more than we ever needed to lose.
Do you think, General McChrystal, that Americans would have made that sacrifice if it was communicated to them in the way that you communicated it to us? Because it does seem like right now there is not a sense of shared sacrifice among all of us right now with the way that people act when it comes to being asked to wear a mask, taking a vaccine mandate, that sort of thing.
Tim, you're right. I think that they would have. Of course, we couldn't approve it until we did it. But if we go back in times in our history when we have asked the American people to sacrifice and be a part of that, we've had very good results. And I think that's the only way to go when we're trying to do something that affects all of us.
We are so often, General McChrystal, talking about leadership and what's needed for the leaders going forward, especially as we are dealing with some really significant problems in our society. And that's, whether it's cyber attacks, the big one, climate change. Nothing else matters if, we ruin our climate to the point that it can't sustain the people who are living on it, or it's too warm for any of us to survive. What does this post-pandemic COVID-19 leader look like who is facing some really significant challenges in our society?
Yeah. First, we can take COVID-19 out and insert almost any crisis, and many of the things we need are the same. So what we need is a leader who is more interested in the outcome of the nation, or if it's a state leader or city leader, their entity, than they are about themselves. They've got to be willing to make decisions that in the near term may be unpopular. I think it was Margaret Thatcher who said that you expect to be criticized in the moment in the hopes that a decade later the wisdom of your decision will come through. So that means they've got to show some courage. They've got to be active communicators. They've got to get out with a clear message that is as true as they can possibly make it to be. When we get too clever and we start to spend things for our own political reasons, what we do is we actually create cynicism, and we make it harder to get people to do the kinds of things that they do. And then the final thing they're going to have to be is a team builder, because at the end of the day, we should have fought COVID-19 as a world community of nations. Inside the United States, we should have fought it as a single nation instead of 50 separate states or many more municipalities. And we didn't do that. We balkanized our response, and therefore we limited our capability.
General McChrystal, are there any individuals you can think of, you can name to us, who embody those characteristics?
There are a lot of good ones. One I worked with closely during the pandemic was Mayor Marty Walsh in Boston. Mm-hmm. And I watched him pull together the greater community of Boston in the face of the approach of COVID-19, which was a daunting tsunami-like thing approaching. And what he did was he pulled all the different players together. He made hard decisions, some of which, like early on canceling the Boston Marathon, were tough. But the leader has got to step out there, but they've also got to bring everybody else along.
You also talk about being risk fit. And I just think about, we've only got about a couple of minutes here, and people who are listening and thinking about, all right, how do I've got this book, I've got to go read it. What do I have to think about, though, in terms of my own organizations when something that I maybe need to do tomorrow, Monday, when it comes to my organization?
Yeah, you can, if you want to, you can wait till a crisis comes, and then you'll find out where you're weak. Or I would recommend there are a number of things you can do to look at the 10 risk control factors that make up the risk immune system that really determines the resilience of an organization, and you can pressure test them. There are a number of things from assumptions checks, and we give a number of solutions in the book that are essentially exercises you can do, like war games and war game equivalent. That what they do is they exercise and they test the capability of an organization, and they give you a pretty good sense of how resilient you'll be in the face of a crisis.
Well, if you think about it in terms of financial markets, you have, whether it's a hedge fund or an investor, right, doing different algorithms to test different scenarios in the market, and they're basically assessing different risk scenarios.
That's exactly right, except in most organizations, we also need to test ourselves. If a crisis comes, who are you going to gather? What's your decision-making process? Who are you going to inform? There are all these things that we tend to learn through painful experience in the middle of a crisis, and then we too often forget them or don't exercise them. So it's taking those risk control factors, making them as strong as possible so that you're essentially ready for any crisis that comes, because we know we're not very accurate at predicting them.
Going to leave it on that note. General Stanley McChrystal, thank you so much. Be well, and so great to catch up with you. Of course, former commander of the Joint Special Operations in Iraq, founder of the McChrystal Group, and his new book out, Risk, a User's Guide. You can catch up with that. It's just relevant to everything that's going on right now.
Yeah, it really is, and I really appreciate the user's guide approach to it, where you can actually use the lessons that are outlined in the book and bring them together to apply them to your own life.
I walk out the door, right? I'm constantly thinking about things.
But it's not a 10-foot monster.
Okay.
That's how he described it. COVID is not a 10-foot tall monster.
It is good to know. We've
not
got
10 feet tall, he said.
We have a great team that make it all happen. Origami, Reggie Bazile, Marufal, Charlie Vollmer, and of course, our Paul Brennan. We thank you all. Have a great weekend. Catch our weekend show. For Tim Stanovic, I'm Carol Master. This is Bloomberg.